GM.
GM. Can't see you.
Pardon me?
Yeah.
How are you?
Good. Pretty intense week, right?
Yeah. Tell me about it. Let's wait a few more minutes for Skew and let the crowd join us, and we'll start talking about the market. I'm just finishing my article, what I believe is next. So, yeah.
Good stuff. Some content on these very important times. Yeah. I think we've got a lot to talk about today, right?
Yeah.
Plenty of plenty of stuff to put in place. It's been a while, right? I think we missed last week.
Yes, sir. It's been a wild week.
Yeah, true.
Don't think we ever before had so many topics to cover. Um,
Yeah, questions, doubts, a lot of unclarity.
um, there he is. GM Skew.
Jam.
GM.
Wait, am I on the stage? I just see like a green screen thing.
Pardon me?
Yeah,
Am I
same.
on
I
the
can't
stage?
see
I
you.
just see like. Do you just see a green screen like trading with Skew?
Yeah, but I will change it as soon as you share your screen. So don't worry about it.
Bear with the unk, aka me.
Alrighty.
It would be kind of funny. The obviously bear, all like the bearish signals came in around here, and then we bottom. That would be pretty funny. I gotta admit.
I just told Richard that I'm finishing my article where I summarize all the points why I'm super bullish long term. I have no idea what will happen in the next days, but I'm bullish Q4 and 2026.
Yeah, no, dude, I think the macro, like the long drop, so to speak, of crypto is extremely bullish.
Exactly.
Well, it's bullish up until I think probably the next US election. That's going to be extremely pivotal. If crypto becomes too big by that point, by that I mean like the treasury is involved in some way. There's a strategic reserve of like BTC, and there's like safeguards, and the Democrats, if they get in, won't be able to do shit. Basically, that's essentially what we need to install or instill, whatever the word is, in terms of like the politics behind crypto and Bitcoin.
No doubt, I think.
So I really want to check.
I honestly think like last Friday, probably something broke in in-house Binance, and that's the aftermath. What we see, like pretty much whole week, I guess. Someone's like bailing out.
Yeah, I agree. What's interesting here is we have no Coinbase premium for once, right? We also know spot ETFs have been selling, right? So that is the seller pressure from Coinbase. However, a ton of the passive buying is specifically Binance from what I can see. So like, whenever you see like on the screen, right, you see like this indicator at the bottom. Occasionally you'll see it spike like down like 0.08% or something like that, right? But you'll actually see price go up, as well as you'll see like the order book depth as well will spike up. Those three increments is essentially a passive buyer that's chasing price to get filled. We could probably see it on lower time frame if or maybe this is singular. It should show, unless it's someone just spoofing it. Yeah, someone is trying to buy, like here and there.
Yep.
At least so far today.
And also, if you look at the perps data, what's interesting here, on this finals tab, like below 104, is I can see some shorts like taking profit. Unlikely, or
Yeah.
so not because when we bounced from 105, I still saw like those shorts staying in position. Now we can see some of them coming off.
Yeah, you can. I mean, I think this initial drop in OI as well with the CVD's longs, right?
Yeah, yep.
This
And then
part.
the last part, yep, correct.
Yeah, so this is primarily shorts. You can also see typically what happens during when like institutional players specifically take profits on short is they'll actually defend the low. So like you can see here around 103.6, right? You can see that bid here, that bid here, that bid there. It's protecting the low as well at the same time they're actually taking profit on shorts, right? And then typically if they're gonna risk on, you start to see each lower time frame dip like chased with bids as well, like quite large ones typically. Yeah, so this is like 120, 84 mil. That's a lot. And essentially what you want to see is if they're going risk on, you'll want to see OI increase as well as the CVD increase as well with price. So there's like real momentum behind price, real positioning in terms of longs, and then obviously to kind of escape the void of another like liquidation cascade, you need people buying spot. And we've already seen on Binance there's someone passively buying behind price. That's partially what lifted price as well. And like obviously this is Binance data too. So we can rule out that like Coinbase is not the one driving price higher. It's actually Binance spot. And then the final factor for you to really have like momentum behind price, you need takers, which is essentially just market buying. So typically for that to occur, you need to, kind of like a salesman, right? You got to like convince the person to buy, like this is a good idea, right? So the market has to get to a level where people are convinced enough to buy. That could honestly be like as high as 107, 108-ish, like the previous lows. Because a lot of traders typically will view that as like a change in terms of the downtrend. Because I mean the downtrend has been pretty consistent. Like it's basically just TWAP selling constantly. I would say honestly this entire sell off here was 100% people dumping BTC spot risk, either because they were underwater or about to be, like so around break even. And more often they want to get rid of that risk in case like equities opens lower today. And there's some case for that actually, because we can see in terms of basically the past week, right? We haven't really done much. Same as BTC if you think about it, right? However, like obviously, notably, the bounces have been significantly more like actual bounces, right? In ES compared to like crypto, which has just been weak, right? We can also see ES moving up here, which is probably part of the reason why there's buying, because that whole correlation between Bitcoin and ES. So the equities correlation is going to be extremely important. However, in terms of like the systematic trend, it does not look like extremely bullish, in my opinion. I'll just set this to chart so I can go through different time frames. Actually, in terms of like 1 day, that's about right. The 4 hour, we've lost the trend, but we're chopping. So best case scenario here is we just continue to chop in a range. Like something like this. Like presuming that's the lower right, and then we just like consolidate here. That would be like best case scenario. Key triggers as of lately is pretty much like 3 things. Risk off nature being, treasuries, bonds get bid. The trade war between China and US, which is negatively impacting both economies and the global economy. There's quite a lot of concerns around like global growth being considerably weaker than expected after the US shutdown eventually finishes. That's another point, considering we don't exactly know the length of it yet. So there's a little bit of risk fear for like so many reasons. Like, one being tariffs. I mean, yes, on one hand, tariffs are creating more equity, so to speak, for the US economy, but also it's costing consumers considerably more because businesses are putting it on consumers. Consumers as well not doing that great in terms of buying power because the US dollar is down because of the whole trade war. So it's creating a negative flywheel for the US currently. And then that may have led to the market breaking itself, at least to some degree, with credit spiking in the past week, as well as like liquidity, which is thinner than usual. So that leads to higher volatility. And like pretty much all of this leads back to the Fed and Treasury in some way, and how they're going to basically backstop this and the future policies. So we know very soon they're going to end QT. Powell teased that. And that's very bullish in terms of treasuries, so it's going to lift treasuries enough. And then on top of that, there's more bets. We can actually check that for 50 basis point cuts, which at like face value is like bullish, right, for the US economy and equities, specifically probably equities, because they're going to rally off the ease of being able to refinance, finance, and borrow money, right? We want the Fed watch. All right, well, so it's okay. So they're gone for the expected. Yeah, 17% as of currently. Yeah, so it's looking like per minimum 25 basis point, but potentially 50 basis point in December. We'll only know this probably in November, assuming by end of month the US reopens, and then we start to see all the BLS data roll through. I wouldn't be surprised to see maybe higher inflation, lower growth, and the more concerning data, which would probably reflect why credit was sold off very aggressively in the past 2 weeks. So yeah, that is the macro backdrop. From here, in terms of like trades, like I said, right, I'll be watching ES in terms of hard trades, as well as when like shit really hits the fan. Typically, like oil just continues going down, right? If it's going to get backstopped, right, and the insiders know, they'll start buying oil very aggressively. So oil will like pull a complete Chad move, like literally where it just like goes up like that and just reverses the entire move. That'll lift probably the entire market, as well as like liquidity will come back a little bit, as well as gold will temporarily pull back quite a bit before it gets bought up again. And then of course, I think this was probably front running in terms of the dollar pulling back, because around the highs, it was like last week, obviously like the 10th, right, when we had that crash. So this was entirely focused on strengthening the US dollar for economic war reasons, especially against China, because they can use that to like quote unquote push them into a corner for negotiation's sake, right? But obviously we've seen that like it reversed. It obviously is not as straightforward as you think. Like obviously, given it's such a headline-driven market, right? Whenever Trump says something like bullish about the market, often that leads to like a top, as well as he, I think, directly said something about like USD being strong or dollar good or something like that recently, and that was also like directly before the dollar pulled back, which is massive. I think that's like a tradable signal, to be honest. Remove that. Okay, so we see a strong rebound in yields. So that's treasuries being sold off. We reversed the pre-market move in this. Probably realizing profits. Let me see if there's a headline.
Yeah, there was Trump just asked if high China tariffs will stand. Answer is no. So, and all
I think we'll be fine with
fine.
China. Ask if high China's expect. Okay, yeah, that's why the market's starting to pull back.
Yeah, massive longs.
rebound.
Yeah, coming in.
Okay, this will be super interesting because you're gonna have like a split audience per se. Half the market's gonna believe this is actually gonna happen, right? The other half is gonna think, he's just kind of blowing smoke up his ass per se again. So when you combine the two, right, you're going to get an underlying bullish positioning in the market. So that's your passive, that's your passive buy, right? On top of that, you're going to get the more defense positioning, right? Which is essentially significant bounces are going to be solved in the market, which we can kind of see here a little bit. Like this bounce is being essentially used to like sell into, right? But again, we had like what I just explained earlier, right? With that perp buyer, these are likely, obviously, algos buying into the headline, right? But on dips, what you want to see is more underlying bullish positioning, which is basically like not degenerate longs per se, right? But the market's positioning for upside essentially again, and it's supported by the spot market. So that would be like a pretty persistent bid. Yeah, if this plays out, this is looking exactly like passive buyer, because we see hardly any movement, significant buying essentially, and volume from takers, which is kind of like an important inflection. That means algorithms are likely still net sell until a point. If you want to be like a gigabrain quant, right? You work out the price level in which that changes. And typically it's actually way more obvious than you think. It would be likely around, like 108, I'd say. And obviously the reasoning for that is essentially these like algorithms. They all use MAs and EMAs basically. So like example, let me go to Trading View. Yeah, it'd be something like this. So as you can see, like on the 15-minute, right, prices rallied into this moving average cloud, like a trend ribbon, right? And typically what happens when you have algorithms which trade based off these, right, it gets sold into it. But if price continues to consolidate, within this cloud, right, and it's above the first EMA, which I set here is a 21, which is the bottom of the cloud, right, and it'll move up. That will set like a precursor change essentially. So that'll essentially mean the orders, so the amount of selling from these algorithms will decrease by like 25 to 40%. Essentially, and then with price, consolidating, eventually, when you break above like the main trend EMA, they flip to buyers, and that's where you see, like quite vertical candles. Yeah, this is a pretty example. Like this is a pretty clean consolidation. Honestly, but you see, behind price, you have obviously clear buying off that EMA, and then obviously with some kind of headline or news, you see that capital injection, which is where price actually goes vertical initially and then trends. That's essentially what you would be, looking for in terms of trend change, something like that.
And in terms of the significance of 105, right? I think that's definitely a level to watch. So I've been monitoring this Steve upselling since Monday open, and I think 105 had the highest traded spot volume, which just happened this morning, I guess. So yeah, we'll need to watch what happens there. That's definitely an inflection point for market, I guess.
Is that in regards to using like TPO? Oh yeah, I kind of did. Yeah, I mean the level here is pretty clear. Like if we're talking about just spot market volume, right? And a good way to do this is just using TPO. And you basically see the high volume node, right? Which typically the middle of it's the POC, right? When price is to retest that, it's a key pivot. Either price rejects it, or price will consolidate around it generally before accepting higher value. And always when it's the case of that, you need a narrative with it. So that would be essentially like today, right? With Trump saying, we'll be fine with China. the tariff rates are not going to actually be as high as is like threatened, right? The confirmation would then be some remarks from China, as well as probably a few other countries as well, in terms of like positive trade, etc. That would be like your key trigger to potentially like swing long, to see like a complete reversal, potentially up to like 119, 120k ish. What are your thoughts on that?
So currently, I'm watching. This is probably like covering starting, but fully agreed. So I mean, the key here is when the cash session opens, how how the market's gonna react. Probably we see a front running of it already, I believe. So like, I wouldn't be surprised, and also like bottoming around, what is it, 10:30 UTC, I guess. That's also, since I'm in Europe, I'm usually watching these pre-US session hours, and for some reason this window from like 10 a.m. UTC till like 10:30 or 11 tend to be like an intraday pivot slot, let's say, this way. Interestingly.
Yeah, I mean, like Zero Hedge, that account. They tweet all the time about the 10 a.m. like sell algo, smack algo, something like that, which is typically like you have a strong open for like the US Open, right? And then around 10 a.m. you start to see like algorithms covering or essentially closing out these positions. So it's like entirely like a game on liquidity, basically. Yeah, as well as we can see currently the bid depth is about 87, 88. It was 90, so it's dropping. At the low, it's about 220. So that's a significant change. Points to two things. Clear, selling into the bounce. Secondly, liquidity gap, essentially, yeah. And that's also supported by the TP as well. Quite low volume. What we need to do is have a look at the overall market right now. See which coins are leading.
You're right about it. Just my addition, for this liquidity gap or vacuum, as you could hear many times. I think there was one right below 110, which was, again, like as you posted, a very critical level. And I was kind of surprised it did not hold. I saw a lot of, again, not a lot of volume traded on that level as well. And then the second one is once we lost September Open, I think it was 108.2 yesterday. Then again, it started to drift lower immediately.
Yeah.
So
after that, we saw so much de-risking. At that point, it was a clear trigger for the market. That's also where we saw the start of Coinbase Premium becoming negative. You could honestly just say that's like Coinbase going into backwardation compared to like Binance Spot, which typically tends to be like a very bearish signal. Like the last time where it flipped from like months and months and months of being constant premium to negative was around or just after the 2021 top. And obviously the trigger of that was inflation and rate cuts, right? The current trigger of market de-risking is the trade war and global growth suddenly, basically going negative, which would be like recessionary, but also the credit problem. So it's like a whole cocktail of all the things going wrong at once, which you don't want to see, essentially. So that definitely spurred sudden de-risking from the market. Wait, no, it's market. Large gap. Let's do 1 hour. MNT, Crow. Okay, so like alts are bouncing a lot. Have you also noticed like ETH's been surprisingly strong?
Yeah, I've noticed that. It's quite surprising for me. You know what else is strong?
What
Hardcoin.
actually?
Yeah, like considering it's like how it should move with the current price action, it's quite strong. Like hype is down 8.5% and Fartcoin is down 10.5, which is interesting. It's my favorite market indicator. I do believe the bottom is close or maybe it's already in.
You're usually pretty accurate on that. I'm not gonna lie. Like last time you said that, I think it was like a few days before it was a confirmed bottom. Actually,
Well, I think that's I usually trade really well such events like buying the bottom of BTC during the FTX clash, last tariffs events. This time they caught me off guard, even though I think I played it like semi okay, but like when I see timeline, I look at group chats, like I completely turn off the charts and I see absolutely depression. When I see the best momentum traders capitulating, it indicates to me that the bottom must be close. And also when I'm bullish long term, and I am, like Fed literally announced that they will be stopping the
QT.
titanium kitty, exactly. So how
Yeah.
can I bearish long term risk assets? It doesn't make any sense to me. So
I think like you probably do see it makes sense. It makes a ton of sense to see like a temporary low get put in across risk, right? And then markets move up. I wouldn't be surprised if like yes, this is the funny thing of making all-time highs, right? Like for instance in 08, 07, 08, right? You know, stock market was essentially making like all-time highs, even though like the underlying economy was fucked, like absolutely cooked. And then obviously that eventually wrecked credit, and when that happened, and also credit only like actually breaks when it's like way too late, and then there's like nothing you can do about it. That's when like obviously you like markets just enter a period of controlled demolition per se. We're not there yet, but I do think like legit something did break in the past few days. I don't know exactly what it is yet, and we probably won't find out for like a few weeks, I would say. And then
I mean,
assuming we bounce now because of tariffs improving, that gives us probably at least a few weeks of good times before we find out what broke.
yeah,
I don't think people will be expecting that as
yeah.
well.
This is your niche. You're probably with Richard. Yeah, not probably you're the best order flow traders I know. That's why I enjoy talking to you and listening what you say, even when I don't understand, either if it's here or in the group chat. But I guess like when Richard says, "Hey, Binance, there is something wrong with on Binance," then maybe the something broke in the house. Like it's hard for me to disagree with that because I have no arguments against that. But I'm happy that so far there wasn't like a big player didn't announce like, let's say Wintermute, hey guys, it's over for us. So even if something broke, with each day passing by, the odds for another collapse because of that collapse are like.
So I can tell you one thing. This is at least what I heard. Apparently, like Wintermute actually didn't take a significant loss at all. They were probably the ones that pulled liquidity first on Binance, and that's part of the reason why the market's broke.
True.
because there was no large to essentially backstop markets that had the same size, the same liquidity quoting. Because obviously, you know, when you understand perp markets, it's literally entirely about the depth, which is essentially the amount of liquidity between price and like 5% below and 5% above. If there's nothing there, obviously price is going to price to the nearest sufficient bid, like especially when you have a market that's almost in free fall. You can get like very insane prices. So that's why you got all those massive wicks lower, because liquidity was pulled. And any MMs that were in the way of that got like absolutely wrecked pretty much. I think that like massively exacerbated the sell-off last week. Because yeah, let's start with like Wintermute pulling bids, liquidity, right? Market extremely thin. The market continues to fall. The selling actually increases in terms of volume. MMs that are too small to handle this end up having collateral way beyond their risk parameters, and they start to cover. That creates more sell pressure, and then they can't get out of their longs because of this, and then because of that, they end up getting liquidated.
I mean, this market is very predatory. Like,
yeah.
So I 100% agree with you. What I was trying to say is not like no one got blown up, because there were many funds that are cooked. Like there is a fund from Ukraine, it's called Cryptology, and the founder was found dead in his car. He committed suicide. They lost like 60 mil USD, something around it. So there are funds. Yeah, like, you know, we've been working with them a bit, so it is a sad information. I knew some people from that fund. But what I'm trying to say is, like, I'm so far happy that not such a big player as Wintermute, Seleni Capital, Kronos, or Jumper got cooked. And every day when each day is passing, the odds for such a big fund announcing a collapse are, you know, becoming lower and lower and lower. And yeah, I'm sure like Wintermute, it's funny that it's funny when people were saying, oh, just before the crash, Wintermute deposited 700 mil into Binance and they probably are cooked. Like, I think they are more than fine.
They're massive. They have more capital than people realize. And on top of that, I believe they can even borrow like a insane amount. I'm not gonna like specify how much, but like if shit hit the fan, them alone they could probably backstop the market if they saw the opportunity to do it.
Also, like what I agree with you, and what indicates for me for that, like I'm not sure if you guys are familiar with such a project called Wildcat. They basically create under collateralized lending market. It's basically based on the reputation of your firm, and Wintermute is backing them very much. Like Evgeny is pushing Lawrence, which is super smart guy, by the way, to actually build it, because they need that.
Oh, Lawrence.
One of the reasons why is that, in my opinion, is exactly what you said.
Right.
Because
wait, did he just cut out?
Yeah, that's what I was going to ask. Is it me or you guys?
Yeah, did he just? Wait, let me text him on Telegram and see if he knocked out.
Yeah, Michael, hope you did not got swatted.
Yeah, sorry, my internet went down. So I was AFK for the last minute or two.
No worries.
No, but like, yeah, go ahead.
There's two other headlines. Trump to meet Z in 2 weeks. Confirmed Friday. That's positive. That gives us a 2-week window, basically, with like a little bit of contingency, I think is the word, on top of that, which is like basically what I mean by that is the market is going to count a percentage of that statement to be bullshit and the other half to be probable, right? And the probable allows the market to be, risk on up to a degree, so that they're not going to be like uber degenerate. But it's kind of a positive note. And then Hassett, if shutdown continues after this weekend, can expect Trump to ramp up actions. That's probably more towards expectations of more pressure on Senate and Congress to end markets should realize there is a new administration. Okay, that's kind of like, is this dude living in Narnia? I mean, fucking markets have known for like a year.
Yeah, also like ES bounced like heavily on the comments. So it was just, and I'm pretty sure, and I can already see this quick spike being retraced. I think the buyer at 105 will be tested, I'm sure. And market tends to fill in these inefficiencies because it was a huge long, obviously from algos primarily, because you cannot really react that, or it's not that easy to react.
Yeah. Look at this shit.
And
bro, this one algo has literally been behind 90% of the market going down. I kid you not. Whoever's running this is making so much money because they're completely uncontested, especially after I think most medium to like small MMs and firms got wiped out. From Binance.
And Skew, like considering what happened last week, and just my quick thoughts on the Friday stuff. First, the variance of wicks across the markets. You can see, like, for instance, Coinbase just went down to 107, while Binance and less liquid perps charts show like 101, 102. And this algo, what I've been personally like, I'm also learning things, and then that's, I think, a pretty good case study and giving me good material to catch up on things. They were not active during New York hours before the Friday's nuke, right? And that's highly likely because books are way thinner before Friday, so they have far more edge and advantage on like coming in with this size and just simply, as you said, forming the shit out of the market this week. So they did what they wanted.
Yeah. I remember you saying that on Telegram a few times, that they were essentially farming the rest of the market, which is highly probable. The funny thing is, you can like legit put this on like 1 second and you can see them just doing it. Like all of these is the algorithms asks essentially. Now if you want to do something pretty cool, what you do with this liquidity level, right? It's actually quite tradable. So there's something called iceberging, right? It's sort of an old term. I think it comes from futures trading. So it essentially means you have a level that has a lot of quoted liquidity, right? Like for example here, there's a lot of selling coming into price, right? If price continues to go up, that would essentially be the opposite. So if an iceberg seller is trying to constantly sell, right, into this price, and then there's someone buying, it's like the reverse of having an iceberg buyer at the bottom, where like price just goes like sideways. I can show you an example of that. It's extremely common on Bitcoin, like this low. Like when you see it extremely flat, like the initial part. Let me take off magnet. Right, that's an iceberg buyer that's constantly getting filled, and obviously the only people that can do that are like massive firms or like billionaires, because they have extremely deep pockets. And what they'll do is they actually put in the lows. They are the guys that create the lows. And then, once that occurs, the rest of the market gets the memo, right? And you have like a slight higher low. Or if you want to make it like pretty easy, you have like flat base here, but then obviously price increases here. And that always happens before an impulse. And this impulse happens with like capital injection, whatever you want to call it. Half of it's sort of like marketing, like for example, like hype that went up a lot in like its initial TGE. That was like perfect marketing, right? So people would allocate into it because it's an appreciating asset. Half of the reason of pumping price like that is because of that. You want people to buy into it because it is appreciating. So then you forcibly create that narrative. That's creating trends and market making like 101 in 2025.
Fascinating. Also, I think the characteristic of that compression is what I would add there. Yeah, what's usually happens before a markup or markdown that we can see often.
Yeah, I mean we'll go here and use data as well. Yeah, so this is the low. It'll take a little bit for heat map, I think, to load. But you can just consistently see, like especially in like perps, what typically happens is you have shorts that like massively pile in here, and you can see that with the CVD going down and funding as well, that consistently dips. And then essentially you'll get a period of like nothing, like cockroach market, right? And typically it's also very like kind of gridlock, but really not. I call this more like capped price, which is typically whoever absorbed all the selling and the shorts here, right on the left, will cap price here, force volatility to die, and then what they'll do is they will run it back, and you can quite literally see them like walking the market up while longing the shit out of it, and they do that to, again, right, create an asset that's appreciating and then force the market as well to buy into that narrative, and that's where you get initial uptrends. And then obviously it's exacerbated by like ETF flows and whatnot because they buy into that too. The fact you know this now allows you to kind of spot when they start doing it, because then obviously you can piggyback off the same flows and make money, right? Trading with that, but then also you start to realize when that ends. And when that ended, it was probably with like these two kind of impulses, like first one on the left, and then second here. So we actually had a ton of passive shorting into price like the entire time on that way up. I was tweeting about it. And that was a keynote change between them. Obviously, the same people that created the initial impulse, right, from like consolidation to uptrend, right? So they were the ones likely shorting here. As well, at the same time, again, they create the initial start of the downtrend, and that was basically this period, right? So price went down, and then all the bad news came in, and the actual spot selling started to lead, basically after like this section. And the expansion down is obviously spot driven, and then the crash, and then pretty much the same thing. It just repeats.
Also, what caught my eyes as you just zoomed out is once we hit 105, and you just zoom out a little bit or slightly, we can see the first time, I guess, during or since Monday, like a little bit of intensity of below price, in terms of fresh bids. That's kind of, if you scroll over.
Wait, do you mean the initial crash?
When we hit, yeah, and then now you can see like a little bit increasing, fresh quotes below price as we hit 105. So probably a lot of trigger for some inventory maintenance.
Do you know what? Actually, that looks pretty good, because obviously all the liquidity is pulled. You can see it. The book is thin as fuck. But you see, bids start to return here, and then sort of around here, but it's still like super thin still. But only basically since around there. Around these asks is when liquidity start to like really return, and then obviously now it's like actually really really thick at the low. Like that's good. That's good bid depth.
Yeah, that's a supple change, I guess, since Monday. First time I see something
almost a bill,
constructive.
dude.
Yep.
It's spiking almost a bill. Like if we were to go down now, the bid depth would probably be about $1 billion. That's pretty thick.
So probably, as a trader, you trade probabilities, right? And
Yeah.
probabilistically, probably this is the place where we should think about not trying to catch the knife catching, but again, like data and statistics say, chances are increasing for local bottomish stuff. But
Yeah.
we see a lot of and again, I was a little bit suffering this week, not gonna lie, but it's, I think, just the new nature of market is the tons of retests and sweeps, right? So you can simply get wigged out in a moment, even more.
Yeah, dude, that was happening to like I got stopped out a few times. It was actually like genuinely it was pissing me off. And
Same.
that's pretty rare for me.
Really frustrated, to be honest.
Yeah, this is the level that I think is make or break for the market. Lines up nicely with the low. It is key pivot in terms of where liquidity is priced. It used to be bid liquidity. We got filled. They got filled here. Price kind of like bobbed around, bounced a little bit, then sold off since then. So essentially, market would have to trade above it and then consolidate around it before going up. Around this consolidation, you typically also want to see, a lot of buyers below it. It's like a lot of bid liquidity, and that's like supportive for the move like higher. This move up would be more towards a break of the lower time downtrend, which has been ongoing since like 116K, call it. Yeah, that's essentially your playbook in terms of change in trend. For now, we haven't seen that. We've seen the bounce off the headlines and passive buying and a few other like really, really key details, but we essentially need to see more action from the market, which is, again, like, people seeing a reason to buy Bitcoin, which is the market buying and the buy volume behind price.
And that level skew you just drawn or marked is lines up with September's open, which is 108.2.
Makes sense. So you get a lot of like confluence with levels like that within like a few $100 usually.
I often mark these or leave these on my chart, like weekly opens and monthly opens especially. And you can just see how market just trades those levels because significant volume has been, or is usually traded at those levels. That's why they are important, or they become significant liquidity levels. Just in short, yeah.
Yeah. Yeah, I did take a long earlier on ETH. I think like 3,700 holds, to be honest. I actually quite like ETH.
That's good.
Did I? You know what? I'll do this on stream actually. I use this one for alts. So let's create We want this to be spot, so I'm going to use that. And then browser's going to load. There we go. And then we want that, and then we want to add order book depth as well. That's pretty much all you need. I mean, you can use VPV volume profiles and stuff like that. Change up to 4K.
Yeah, by the way, Skew, I just checking out this weekend, MMT Pro, because that has 1 second chart, because I could not get it yet on Kiyotaka, but I'm on it. But I'll give it a shot and see what they can do.
Yeah, I keep hearing it's really, really good. I'm going to try it out this weekend as well. I mean, dude, the guy behind it is like a legend. He's shipping features and whatnot, like, and like insane, to be honest. Damn, wait, the market's actually long term, like super bullish. I mean, this is kind of off topic, but when you see each low, get significant bid depth like this, right? And also with like the price action like that, there's a very, very large underlying buyer, like really, really big. Someone's bidding the absolute fuck out of ETH. That's probably why it's maintained its structure. Yeah, like we haven't ran the lows compared to like Bitcoin. Like, yes, someone's been buying the fuck out of these lows. It was pretty meh here, but after this low, they started buying it. So they're probably averaging down if I was to think about it. So now the average should be like somewhere here. Which would also mean they probably have this would be their break-even price. I mean, not break-even. This would be like the line in the sand. Like you lose 3,600. I think ETH shits the bed. See, right now we unironically, like if we're ETH bulls and bullish on alts, potentially having like a massive relief bounce. You do not want to see 3,600 or 3.6K get lost. Because if that happens, then alts probably go like straight down. That's my quantitative 2 cents.
Thank you for the insights, Skew.
Yes, sir.
I think these are the days and weeks we live for, right? It's so many dynamic changes and like historical things, because I don't think, but correct me if I'm wrong, we saw this scale of flash crash even in COVID, I think, and given the liquidity we have.
Oh, dude, in alts, like alts got railed, man. I haven't seen it like as bad. Maybe actually, I'll say in terms of alts free falling in the market, last time was probably May 2021. That's when like a lot of alts went down like 80%, I think.
Yeah, true.
But in terms of like the speed and the volatility within the alts, yeah, mostly due to probably Wintermute, obviously pulling liquidity from the market. Last time that happened was COVID crash.
And like, even if you consider, I think probably smaller leverage positions were also wiped. So it was that violent.
Yeah. I believe it was even like 2x longs got liquidated.
Yes, true. Yeah, 203. I believe it was on the edge of liquidation. So it's crazy to think about this, right? So it's really shaked out everyone pretty much.
Yeah, man, it did. I'm gonna do a last check of the market. Let's do small caps. Let's see what's Lido. Yeah. Okay, everything's kind of like sitting around 2 to 3% up. Huh, Trump 1%. PAX. Oh, PAX G. That's gold, no?
Yeah.
Yeah, I
It's
saw someone tweeted about that. Like the chart was like scuffed or something like that.
I mean,
Oh yeah,
with
yeah,
gold,
that's true.
it's quite interesting, the whole gold situation. And people
Yeah, I
getting
mean,
in the line to get physical gold. I actually feel this is so topish, but also everyone on City is calling for gold top. But those lines getting to, in US, in Australia to buy gold is ridiculous. Like, I think Evgeny tweeted
well, I mean,
about.
to be fair, with the Australian economy, it's cooked. Like honestly, it's totally fucked. Because obviously, global economy when it's bad, this time because we don't have Chinese growth to backstop us, like during the GFC. With Chinese weakness, you got the double whammy situation, which is essentially the worst case scenario for the AUD. So it essentially means like people stop buying our goods, right? And since we're an economy that just digs shit up and sells stuff, that's bad. Like it essentially means there's zero reason for them to hold and buy a AUD for the terms of trade. So then our currency becomes the same as like the yen.
Correct me if I'm wrong, but if I recall it correctly, Australia export a lot of rare minerals to China. Mm,
Yeah,
and it's probably backfiring Australia right now. I haven't seen any chart of Australia's stock market or the currency,
we'll look at it right now.
but yeah, it seems like if the tariffs gets into place, like it could be quite bad for Australia, since you guys are
Yeah,
pretty much dependent on China.
yeah, we have been for like 10 years.
Yeah.
China's growth is the best catalyst for our currency because we're strong trade partners with them.
Yeah.
It's a pretty complicated relationship because when China's in self protection mode, as it is currently with the US, they get kind of cornered, meaning they can't they can't spend the same amounts. That means they buy less or they try to undercut, which impacts the Australian growth as well as trade. And then obviously with miners and like cattle and big sectors that have a lot of employment, if they don't meet like quarter by quarter targets, they start to lay off people. And when that happens, it's not a good situation. We actually haven't really properly experienced a situation like that. And I don't know if like the Australian economy can even combat that. I mean,
Yeah,
they'll probably do what the US did during COVID, which is drop like yields to near zero or like 1%. Because that's the only way they can potentially backstop it, and then QE, which again is gonna like destroy the currency. So it'll end up like the yen, I think.
got it. What do you think
I
about?
don't hold like any AUD. I hold euro and USD.
Got it. What do you think about uranium? Like, correct me if I'm wrong again, but
Up
Australia
only.
has quite a bit of uranium, and here big shout out to George from Kronos Ventures and Jack and Mark, founders of Kronos. They're very bullish uranium, mainly because of the AI race and the need of cheap electricity. So yeah, it's
Yep,
basically up
correct.
only trade. Yeah, so shout out to them here. But as far as I remember correctly from my geographic lessons in high school, Australia has shitload of uranium, just like Kazakhstan.
Yeah, true. The problem is, I don't think they dig it up because the government's stupid. Like the government here is their policies is basically like the whole scam of net zero. So they'd rather spend all the income that they get basically from taxpayers and corporations, and then throw that into unsustainable green energy, right? And then they don't even want to have the conversation about uranium. So, I mean, like maybe controversial take, but like you probably have a better chance of like China taking over Australia to then get the uranium versus like the current government doing anything about it. Unironically. But yeah, I mean, I've been a huge uranium bull since like 2022.
Nice.
What about
I think
soybeans?
globally, soybeans.
Yeah, I'm sure you have seen the headlines from Scott Bessent and Trump as well. You know, some debates around why China is not leveraging their soybean resources and stuff. So it's really funny.
Soybean meal 1% today. I saw like some chart recently of soybeans like going ham, like performing extremely well. What's trading me? Let's see. Okay, that's a new one. Okay, I guess we can do this. 2023. It's gone down a lot since like. I mean, do we long the soybeans?
With Scott?
Yeah, long the soybeans, bro.
Yeah. Definitely, bring up in the group chat we have for the stock for the communities, guys.
What are the headlines at the moment? Is it still yapping? Trump on China tariffs. We have to have a fair deal. Okay, that's bullish. We're going to do fine with China. Oh, 100% tariff is not sustainable. Wait, Trump on China tariffs is not... Dude, okay, he's actually caving. That's good.
I mean, like, you guys, I think everyone is forgetting that a vast portion of Trump's net worth is in crypto now. Yeah. He's super heavily exposed to crypto. Also, he's a guy who's, very egocentric. Like, he's bullshit about
dude's ego is fucking huge.
It's just because he wants to get a Nobel Prize. That's literally the only reason. Like why he's trying.
You're probably right.
He's trying to highlight him as a guy who makes peace. But like, even if he sees that, like, what he's doing makes his wallet suffers, I think like he's gonna get out of it. So yeah, the guy brings a lot of volatility, but from all the presidents that I witnessed in my life, I think he's the one that wants the market to go up the most.
Yeah, I mean, definitely he's all about making money, right?
Is he retarded? Is Warren absolutely printing for inside trading? Yes. if CIA is listening to that, don't dox my others. But what I'm trying to say is like, I don't see a world where he actually really goes into a war when he pays for that from his own pocket. Yeah, if he's
Yeah, no,
so
actually, that's a good point. That is a really
like
good
if
point.
he's so money hungry that he's promoting his son's book, like come on, how much money you can make out of
Wait,
books?
his son
Like,
wrote a book?
yeah, his son
Baron?
wrote a book. Eric wrote a
Baron
book,
or Eric?
and Donald is tweeting about it. Like I
Oh, no
understand,
way,
like
what the fuck?
they are money driven, but this guy is not letting a single penny slide by his pocket. Every penny needs to end up in his book. Open his Twitter right now, man. You're gonna see he's tweeting all the time about the book and how much money you can actually make on a book. Like even if you say a few dozens of mil, like let's say 20, 30 mil, I think that's like probably the most you can make. But still, like it's nothing compared to his fortune. And yet he's focusing on that. So I don't think he will let like a few bill of his net worth in crypto just, die. That's
Yeah.
also why I'm bullish 2026 and end of 2025. And yes, I need him to fart when he has a speech. I'm still betting on that scenario.
Because of fuck, man.
Yeah.
Wait, dude. Someone from CT needs to pay someone to go to the press conference and ask him about farting. Bro, if someone does
I
that,
was
fart coin
actually
will like legit moon.
I was actually thinking about like, getting someone or doing it myself with the camera that, records heat and go to every of his speech, because sooner or later he will fart and it's, shown on the camera when it checks like what's the temperature.
Oh, you're talking about like a thermal camera.
Yeah, exactly. So that's basically what I need to make it in this market. But jokes aside, like this guy won't let crypto die, and everyone calling stops here that we are going to Goblin Town on Bitcoin, because with altcoin I have no idea. From last Friday, I would say like 300K per Bitcoin is way more likely than 40K with Trump in the administration.
Yeah, unless like the whole global economy blows up. Yeah, I agree.
Yeah. Also, Eric is pretty ETH if bull, so BTC and ETH should be a comfy hold here. Yeah, so that's all, a few cents from my pocket and what I see in the market from like very, very, let's say, high overview.
High overview is correct.
By the way, we haven't talked about the gold run yet, and maybe BTC/gold this week. I mean, that's also like one thing I'm looking at in comparison with yields as well, of course.
Yeah, I mean, yields fell because trade war and also credit, which spiked. That caused some fears and panic that something broke in the economy, which I think it did, and we won't know for like probably a month or so. These things make gold go parabolic as well, like quite honestly. Like literally since the 10th, it went parabolic. And now that obviously we have more positive trade relation, yap from Trump, right? Gold is quite likely to dip, like somewhere here, but I think it'll still continue up higher, unless somehow they strengthen the dollar significantly. Like if the dollar strengthens significantly with like a lot of like pro growth stuff, which is not like recessionary or whatever, and like high services, high costs being paid by consumers, like that kind of thing, that would probably put it in the top for gold for like quite a while. What's like 2 cents, I guess.
Yeah, it's like a frame for the week, right? So whole uncertainty from the open, and some easing signs of easing or tone change in discussions and all that stuff for Friday's session. Interesting.
Yeah. Do we even know? And they because we have CPI on Friday the 24th, and apparently
Still halted, right?
Yeah, I mean the U.S. government's still shut down, but they kind of alluded to that was going to happen around the end of month, right? I don't know. I mean, maybe they're kind of alluding to somehow that they are going to agree to reopen the government like next week for that to happen, which gives them like 4 days. Probably isn't enough, to be honest, for that kind of report. However, I think like next week is super important because it's either U.S. Government reopens or it prolongs into November. And if it prolongs into November, then you're going to see like more defensive, sort of like a risk-off notion.
And what are the thoughts when they return operating? Like, is like all the data going to be just thrown at market at once?
No, it'll take a while.
Chaos, or then just will release when the next one comes, and they will release like 2 consecutive ones.
They'll probably release all the data that was meant to be released over like. Just assume they reopen like November 1st, right? It would still take them like 2-3 weeks to get all the data out from the past month, and that in itself will delay. I think data potentially by as long as a month. They might do reports of October and November at the same time, which I think that's probably going to lift volatility because it's going to confuse the fuck out of markets. And like fund managers won't want to carry that kind of risk.
No, that's totally legit, I think, and because 2 things I'm looking at, of course, is this one when the government reopens or returns operating, which will again, I mean, with all the missing data and stuff, it's just gonna be make volatility, as you said, like going or skyrocketing. And the other thing is obviously the tone change or a potential deal with China. That's what could probably boost things and catalyze things in a different, probably in an unknown sequence.
Right. But we also have a window of 2 weeks for that, which puts us say 31st. So nice. I think everything lines up to the end of the month. That's what it seems like so far. I don't know 100%, but it seems like that. Potential deal with China end of month would be bullish for probably December. US government reopening November as well would be confusing and chaotic as fuck. But yeah, obviously depending on the data and like what actually happens, then could potentially be pretty good for markets too. If like all of that happens, you'll see a lot of probably degenerate chasing of the market. Obviously on the bearish side, you just see everyone shut the fuck out of the market. So either way, November is going to be a very volatile month.
I mean, we always want market to move to be able to trade. Now I think we got that.
Yeah.
Although I think like we forget about one more important point. October is such an easy mode, guys. It's up only. Like October is such an easy mode. Historically, it's up only, and this year, it's absolutely.
Oh yeah, yeah, easy month. Yeah,
yeah. I mean, month in like 5 years.
Yeah.
James Wynn just tweeted, "Bottom is not in."
Okay, so bottom's in. Gotcha.
Yeah, my thesis is becoming way more likely to actually be accurate.
Yeah, what did you think of that audio clip that you heard of? I mean, he was clearly like drunk, like very fucking drunk.
I think he was on pills, and I think he even said that he was on pills. Like you have the Wolf of Wall Street scene where
Yeah, where they take the
pills and
quaaludes
trying
and
to
then they're
talk.
like slurring and
Yeah,
shit. Yeah.
yeah, and he drives his Lamborghini. Yeah, so I think that was pretty much him. And I don't know. He crashed out so hard. Like yesterday, he was tweeting CZ, check your WhatsApp, and CZ replied to him, bro, like you don't have my WhatsApp. That's the first thing, and the second thing is like don't do it ever again. It wasn't that urgent. Yeah. And he
Yeah,
joined
true. I mean,
as an intern or something like that. Yeah.
wait, fuck, I was gonna check something. I forgot. Oh, yes. Where is data? I want to look at the calendar. Bitcoin returns percentage. Yeah, this. I was curious. Like historically, Q4's been like bullish.
Yeah, that's
Yeah, historically, October is called October too, but
Cocktober, we should call it. I mean, it's actually not bad. November's like, oh yeah, okay. So like, big moves in November or continuation, I suppose. In 2019, it was continuation, but I mean, obviously that's because 14K was like a bearish retest. I mean, this year's more like 2021. So maybe wait, dude, look, 7%, 7%. What if November's 40%?
let's do it like this. And I mean, come on, we've only had like three red months so far.
We've done like the opposite almost of 2021. Huh. Okay. The schizo part of me wants to bet on November being very good and December being very good too. Yes. Yeah, I'll bet on both. All right, anything else before we wrap it up? It's been like hour and 20 minutes.
hour
That's pretty good.
and a half. I have an on-chain cheater, but I won't share it since it's not the market for on-chain cheaters. So
Yeah, what do you think happens to like what happened to on-chain shitters after October 10th? Like, did liquidity drop, or did people start betting more on shitters to make their money back?
Probably it's hard to say. It depends on the token. Some of them didn't move at all. Some of them absolutely nuked. Overall, the on-chain liquidity was behaving way better than order book liquidity. So I think I mentioned that in the chat, like, for example, on-chain Fartcoin liquidity and order book Fartcoin liquidity was so different. Their arbitrage opportunities were like 20, 30%, even 30%, because the highest, I think, difference was 30 cents on hyper liquid spot and 40 cents on Jupiter, so Radium overall. So I would say it handled way better than exchanges liquidity. The issue is like there is no marginal buyers for those cheaters now. Like everyone is pretty much dead. And heavily underwater.
I've been thinking about it. spot wise, retail's probably underwater to some degree. Like all the new entrants to the market, right, would definitely be underwater at this point on like alts, if not liquidated, right? So that probably further rules out that like retail's not going to be the ones buying alts in Q4 in our bag, so to speak. I've been thinking about that a lot because I'm trying to like figure out, where is the liquidity going to come from other than, the significant whales that have been just sitting on hands like most of the year and riding trend. Like Kobe's a pretty good example of that. I think he takes like a few swings per year, maybe like one or two. Like probably 4 to 5 at most. Yeah, I feel like he'll be a pretty good signal. Like if he's like bullish, respectively to like he's bullish and the market actually looks good too, kind of thing. Because just following whales on CT by itself is kind of stupid, but seeing it represented in the market the same way is pretty strong confluence, I'd say.
Yes, in general, I need to agree with you, but also another my like final thought on the general market and where we are heading, because I'm not good with LTF moves. HFT moves, I think I'm okay to finding swings. I don't think all season will ever happen again. This market became such a predatory environment that you have opportunities in the altcoins. Like, let's say, if ETF rally, Sol rally after FTX collapse, Pump rally from 4 bill to 8 or 9 bill, BNB rally from, let's say, like 700, 800 to 1200. You have moves where in a matter of few days or weeks you can capture like 50% move, and
Yeah,
there will
true.
be such opportunities. But easy mode of 2021, which people consider as something normal, is completely wrong. Those times are never coming back. That's my opinion. Like the times
Yeah.
when you could buy any dog shit altcoin and just hold it are over. Another great example would be a hike from $12 to $50 swing, because above $50 it was quite risky. So from trading perspective, it was way better to just take the trade. Fartcoin from 30 cents to 1.6. You have many such opportunities almost all the time. And that's the
That's
new
true.
that's the
It's
new alt season, and people need to forget about
yes.
the previous alt season. The environment was so different. Everyone was bored, locked in home. Inflation was so high. There was such a helicopter money strategy. Like everyone was able to trade, and everyone was chasing those gains. And with such approach, right now in this market, you will constantly bleed. That's also my issue. It's not like I'm the smart guy here, because like when I did
Well, I mean,
confession,
yeah, like both of us have learned that
when,
through losses.
yeah, when I did the confession in the mirror, like it's one of the mistakes I've been making in the past 8 months. So you might have those small booms like December, early January, um, early this year and last year. You can have March 2023 when altcoins are booming, but it's gonna be like very short and aggressive moves that may stay for like 2 or 3 weeks. Like basically at this point, if we feel the week, the whole week, because most of the altcoins are still like down 40% compared to where they were a week ago this time. Yeah. Okay, yes, Solana is pretty much recovered, ETH pretty much recovered, BTC pretty much recovered, but smaller altcoins, they're still in a really bad position. So
Yeah.
at this point, if we feel the week, it's already the alt season. So yeah, just holding dog shit and hoping for
Easy
making
money is
easy
pretty
money.
improbable. Yeah.
Like this is one
Yeah.
of the mistakes I've been making, but it's over. You need to have very trader mindset in this market. Maybe one day it will
Yeah.
change. I don't know.
It's like two things now, right? And it's been like that since probably 2023, right? It's all secular trades, meaning sector to sector, essentially. Like Sol season was huge, right? You had ETH season, which is like big but not as big as Solana. And then obviously you had hype, right? And Hyperliquid's season where like everything on hype for like a week or two went up like multiples. Like a lot of people made a stupid amount of money on that. And like, you know, it's all narrative driven for that to occur. So like, you know, DATS was one for like a period until the market went down. And I'm sure there's going to be like a bunch of other ones as well that'll just come out of like nowhere. And essentially, you make the most money by being pretty early in those narrative trades, especially knowing that it's backed by significant players, or even if it's backed federally, like by countries like the US, you know it's going to play out pretty well, at least for a period of time. Like, I mean, you can just look at Aave in terms of how it performed from pre-US election to like after Trump getting elected. It like completely ran up, and a bunch of the other DeFi projects ran up as well.
Yeah. One last final thought. I will elaborate on that next week. The next altcoin season will be on Base. That's my take. Pretty much because of the speculation of Base airdrop and Base token. That's where liquidity, in my opinion, will rotate. That's why the most time I spend now researching Base ecosystem and looking for potential runners there. I wouldn't be surprised if we had another leg on AI cheaters there, mainly because of the narrative that is playing in TradFi, and historically the best season for Base was AI Mania in December, which could be like a post-bubble echo. And
I could see that, yeah.
And my plan is to capture that move and get out right before the airdrop, because historically after the airdrop, everyone is expecting the injection of liquidity, Arbitrum case, for example, and it simply doesn't happen, or Starknet.
It's really, really rare. The only time it happens is, and Kobe kind of tweeted about this recently, is like hype being only listed on like DEXs or just Hyperliquid itself is actually really positive for the hype ecosystem, because people have to, well, think about it, people have to deposit their capital to Hyperliquid to get allocated to it. So like when it initially dropped, right?
Yes.
People had to deposit money there to even get allocated, and that ran the token up a lot.
Yes, Hyperliquid token, yes, but ecosystem tokens from Hyperliquid, no. All of them lost value compared to hype, and that's my take basically.
It's always like a cycle, right? You have the base token that appreciates, that the gains from that go into the shitters of the ecosystem, and then those run, and then the liquidity goes back to the base ecosystem token. That happened really recently with BNB. That's why BNB ran to all-time highs after the crash.
So that's all from my side, from, let's say, on-chain DeFi Degen. My confession, because I've been doing a lot of thinking for the past week, it's the main advice I could give myself and people like me who lost a lot of money. It's, we need to, guys, liberate our minds from our net worth all-time highs. It's the past. It's already happened. It's not coming back anytime soon. And by taking abnormous risk on tier B setups,
TRV, that's so fun, dude. I haven't thought of TRV in so damn long.
We won't make it all back. Like
holy shit! Speaking of TRV, did you see this? Look at the wick on it.
Yeah.
Holy cow.
34. Damn, bro. Yeah, the DWF got like blown up from that or what?
What went the hardest? Was it Atom, I guess?
Atom, I think that almost went to 0, right?
To 0. Yeah, that's just ridiculous.
Atom went to 0.
It went literally.
It was 0.
My god. Holy
The alt
1
season
cent.
that you are
Holy
looking,
fuck.
the alt season that you're looking for was at the bottom, and making it all back with that week.
This
Yeah,
this says it all.
I
So,
need to
some
run.
dude got filled, like, wasn't it around 10 cents or something like that?
Jeez.
I think
Yeah.
it was around that. And then, dude, fuck, wait, was thingy 10 cents? Holy shit, that's, dude, what?
What?
You'd be up 30. Oh my god, because if you put in like $10, that's like, wow.
Yeah, that's the alt season. Anyway, let's wrap it up here. Thank you for today. I think it was pretty good session. And thank you guys as always for your time, and talk to you next week.
Yes, sir.
I appreciate it. Take care, guys. Be selected.
Take care.